Hello students, now in the accounting ratio, sum number 9, 10, 11, 12, 13, 14, all these sums are not in our syllabus for this year. So sum number 15 now, that is related to that 15, 16, 17, 18 and 19, all the 5 sums are related to that efficiency ratio. That efficiency ratio we have seen in the previous video, right? I hope all you have learned all the formulas of efficiency ratio. In that now let's see sum number 15, that calculates stock turnover ratio from the information of L Company Limited. Now all the informations are given in that sales, closing stock, gross profit rate, opening stock and purchase. Now see, we have to find out stock turnover ratio. Formula of stock turnover ratio, that is cost of goods sold and average stock. Here cost of goods sold, that is directly is not given, so we have to find out that by applying that format, if you remember. Now see, this is the format that we have seen to find out cost of goods sold. In that, whatever information is given in the sum, we select that format and formula according to that information, and we require average stock, opening stock plus closing stock upon 2, right? Now here in this sum, we select this formula, cost of goods sold is equals to sales minus gross profit, because here in this sum sales is given and the gross profit rate 30% is given, right? No more information is given, so we selected that formula. So see the solution. Sales, that is 30 lakhs, gross profit 30% of this 30 lakhs, so that comes 9 lakhs. So now our cost of goods sold, that is 21 lakhs. Now average stock, formula of average stock, that is opening stock plus closing stock upon 2. Opening stock 3 lakhs 50,000 is given, closing stock 2 lakhs 50,000 is given upon 2, so that comes 3 lakhs. So now we apply the formula, stock turnover is equals to cost of goods sold upon average stock. 21 lakhs upon 3 lakhs comes 7. So stock turnover always measure in times, because stock is measured in times only. So with this 7 we write down time unit. So this is the sum number 15. Sum number 16 now, calculate stock turnover ratio from the following information of Y Company Limited. Now see, opening stock, sales, purchase expense, closing stock, purchase and wages. Here also we have to find a stock turnover ratio, but little more information is given over here. So we follow that format to find out cost of goods sold first of all. So opening stock plus purchase expense plus wages. So total comes 27 lakhs 50,000, and from this we subtract closing stock. So we get 27 lakhs, right? We follow this format because all the informations are given. So for this sum we follow this format to find out cost of goods sold. Now average stock, opening stock plus closing stock upon 2. Opening stock 2 lakhs is given in the sum, closing stock 2 lakhs is given in the sum. So upon 2 comes 1,75,000. Stock turnover ratio, cost of goods sold upon average stock 27 lakhs upon 1,75,000. So 14.86 times. Sum number 17 now, calculate working capital turnover ratio based on sales and cost of goods sold from the following information of Z Company Limited. This is the formula of working capital. Working capital turnover is equals to sales or cost of goods sold upon working capital. For to find out sales, we follow these formulas to find out sales. When sales is given, to find out, sometimes when cost of goods sold is given, so at that time we take this formula to find the working capital. And if loss is given in the sum, then we take this formula to find out that sales, right? And formula of working capital, that is current assets minus current liabilities. Now see, in the sum 17, cost of goods sold is given, non-current asset is given, non-current liabilities that is given, gross profit is given, current asset is given, and current liabilities is given. Now here we do not require this non-current asset and non-current liabilities, so cancel this, right? We require this current asset and current liabilities. This we require to find out sales. So now we find out sales. For formula of sales directly is not given. Sales comes in this formula, that is cost of goods sold is equals to sales minus GP, right? So we transfer this GP on this side, so it becomes plus. So sales is equals to cost of goods sold plus GP. इसको हम यहाँ पे ट्रांसफ़र कर दें, right? So cost of goods sold plus GP, so 32 lakhs plus 80,000 comes 40,000. Now working capital, current asset minus current liabilities, 5 lakhs is given, 3 lakhs current liabilities, so we get 2 lakhs rupees. Now here we have to find a working capital ratio based on sales and based on cost of goods sold. Now whenever based on sales is given, to find out, we apply this formula, sales upon working capital. Sales, now we have 40 lakhs, working capital, now we have 2 lakhs, so 20 times. Turnover is always measured in time, so this is working capital turnover, so times we apply with the answer. Then based on cost of goods sold, for that working capital turnover is equals to cost of goods sold upon working capital. Now see, ये याद कैसे रखें, यहाँ पे based on sales is given, so in the numerator we write down sales, and here based on cost of goods sold is given to find out, so in the numerator we write down cost of goods sold. Cost of goods sold, that is 32 lakhs, which is given in the sum. Working capital, that is 2 lakhs, that we have found out, so 16 times, so based on cost of goods sold. Sum number 18 now. Now see, in the sum number 18, from the following information of B Company Limited, calculate debtors turnover and collection period in days. What will be the answer if collection period is calculated in terms of week and months? Days we have to take 360 instead of 365. If you remember formulas of days, debtors turnover we always find out in days, in weeks and in months. Now see, here total sales is given, opening debtor, opening bills receivable, opening creditor, credit sales, closing debtors, closing bills receivable and closing creditors. All these informations are given. Now see, debtors turnover ratio, which is given on page number 240 in the textbook. Formula of debtors turnover, that is credit sales upon average trade receivables. Average trade receivables is directly not given, then we find out this by opening trade receivables plus closing trade receivables upon 2. Now note is given that during determination of trade receivables, BDR should not be deducted from debtors. If it is given in the sum, then we should not subtract BDR from the debtors. Right? So now we find out debtors turnover. Now first of all, here average formula, that is credit sales upon average trade receivables. Credit sales, that is given in the sum, but the average trade receivables directly is not given in the sum. So we find out average trade receivables by applying formula, that opening debtors plus bills receivable plus closing debtors plus bills receivable. ये closing bills receivable है, ये opening bills receivable, because bills receivable, that is also trade receivables, so that we have to add. तो एक ये opening का हो गया और एक ये closing. So put up all the values which is already given in the sum divided by 2, so comes 73,000. So now we can find out debtors turnover ratio, credit sales upon average trade receivables, 3,65,000 upon 73,000, that is 5 times. In days, weeks and months, so 360 is given for to take days, so 360 upon data's turnover, so 360 upon 5 comes 72 days. In weeks, there are 52 weeks in a year. 52 upon data's turnover, so 52 upon 5 comes 10.4 weeks. Then after, in months, 12 upon data's turnover, 12 upon 5, so that comes 2.4 months, right? Now the last sum, that is sum number 19. From the following information of C Company Limited, calculate creditors turnover and payment period in days. What will be answer if payment period is calculated in terms of week and months? Now here in the sum number 19 we have to find out creditors turnover ratio. Now in the creditors turnover ratio, first of all now we look at that in which informations that is given in the sum. Now see here, opening balances in the creditors, bills payable, bills receivable, debtors. Closing balances, creditors, bills payable, bills receivable, debtors. And your credit sales, cash sales, total purchase, cash purchase. All these informations are given. Now this is creditors turnover ratio. So for main formula is credit purchase upon average trade payables. For the payables we require credit purchase. Now here cash sales, that is also given, and cash purchase, that is also given. So here we have to find out credit purchase. So total purchase is given and cash purchase is given. So from the total purchase we subtract cash purchase. So we can get credit purchase. So 6 lakhs minus 2 lakh 40,000. So comes 3 lakh 60,000. Right? Because we have find out this credit purchase because we require this for this main formula. This is directly is not given. Average trade payables is equals to opening creditors per plus bills, opening bills payable, and closing creditors plus closing bills payable upon 2. All the values are given in the sum, so put up the value and find out average trade payable, that comes 60,000. Now creditors turnover formula, credit purchase upon average trade payables, so that comes 6 times. Now payment period, right, that we have to find out in weeks, in days, in weeks and in months. So 360 we have to take for the days, 360 upon creditors turnover, so that comes 6. So 360 upon 6 comes 60 days. In weeks, 52 upon creditors turnover, 52 upon 6, 8.67 weeks. In months, 12 upon creditors turnover, 12 upon 6, so that comes 2 months. So this is how we can solve this accounting ratio in the efficiency ratios. So all the sums we have solved from the exercise. So all the sums you write down in your notebook. Do practice yourself. So that's all for today.